Okay, today we have a lot to talk about. We're going to go straight into the price action and decipher what's been going on. But first things first, before we do any of that, big shout out to everyone who's followed over the weekend. So shout out to Fatiha P143. Big shout out to you. Shout out to Kamal or Kamalishak or Kamalishak. Yeah, I'm terrible at these names. You guys, you know this. You know this. All right, shout out to Beanie or Benny. All right, shout out to you. Shout out to Bite Me 04. Hope you're getting bitten. Shout out to you. But yeah, welcome to the family and hope you find this content useful. Feel free to check out tradejournal.co.uk as well if you want some more insight into how we can assist. All right, so let's get into the price action. I wasn't going to do a video today, but I thought, we've had a nice long play that we gave in advance yesterday, Sunday. And I thought it's worth just, talking about that and seeing what the future holds as far as Bitcoin goes. So we're going to rewind and just discuss what happened. So congratulations if you took that long. That was a very easy one we prepared for and we planned for that one. So congrats if you took that one. So how did we even, get to looking at that trade? What were we looking at? Well, we said green line is our range high. We're heading towards that range high. We also said, we talked about a sandwich yesterday, didn't we? We talked about that ham and cheese sandwich. And we have that ham and cheese sandwich in between where we've got supply at the top and demand at the bottom. And then we said, right, we have obviously reacted off of that daily demand over here. We've broken market structure. What's likely? Well, we're likely going to get some sort of retracement before we carry it up, but we are slowing down in this range. But that doesn't mean we don't carry on further up. So I said trade number one, we're going to be looking at deviations from the range high and range low. And trade number two, we're going to be looking at continuations from range high and range low. Okay, so it happens time and time again. So what happened? Well, we said we've got this 12-minute zone over here that there is a chance that price comes all the way down, gives us a nice flipping market structure as we can see here in green. It's a bit messy, but if you watch that video on Sunday, you can know exactly what happened. So we're going from printing low lows and low highs, and I said exactly as soon as we get that flipping market structure, we should be looking to enter on that retracement for that long up to give us a nice little look at that 11x. So we're going to see how that transpired. See if we could have entered that one. If you did enter that, shout out to you. Well done. Hope you're in good profits. You could still be in that one. So very well done to you. So I'm just going to play this and we're going to enjoy this bit of price action. Boom. So look at that. So price comes directly into our level, that 12-minute zone. All right, and then we get that aggressive reaction. Look at that bar. That is a juicy bull bar. Look at that bar. Very nice bar. I would like to measure that one. I'm going to measure that one in a second. But very nice bar. We've also broken structure here. All right, so that looks like on the higher time frames, we've broken structure here. So we've gotten out of that range. All right, so yeah, that was that trade. So congratulations if you took that one. Very well done. Let's just quickly zoom in to see what that trade actually looks like. In the live chart. So that trade would have been right around here. Yeah, so right around here. This is where we were. If we go down maybe to the 12-minute, we can see that we had that 12-minute, I think it was a 12-minute demand, wasn't it? Yes. I'm just going to redraw that so we can, see where we were. I think it was that one. So we had a 12-minute demand in there, which we dragged all the way across. And I believe that's where price came for that reaction. But let's double check that. Let me just double check that. So we've got the actual facts. It was a 12-minute zone. Yes. So let's go back to the chart and let's see if we can actually identify that 12-minute zone carefully. Yep. So here it was. It was a 12-minute zone. It was that one. So if we pull that across, we can just watch the price action, enjoy this nice little play to see how we would have entered that trade. All right, cool. So look, now price obviously came down, swept the prior low. Now some people may have, I'm not sure, some people, a lot of people would have thought this. A lot of people would have looked at the price action like this. They would have said this. They would have said, okay, high, low, high, yeah. And then they would have called this a break in structure. They would have said, yes, we broke structure here. And because we broke structure here, that's fine. We're going to be looking for that retracement to enter a short. Now, I don't blame you. If you did that, I do not blame you. All right. But we're just going to talk about why potentially this, even though this was a break-in structure, say on a 12-minute, what signs we saw that was to tell you that this was actually a range deviation. So first things first, if we simply concentrate on this region and we just flick above and look at the higher time frames, we can see that although that was a break-in structure on a 12-minute, if we go to the 24-minute, it's looking less and less like a break of structure, isn't it? It's looking less and less like a break of structure. I'm just going to tidy this up so it looks nice. All right, that's better. It looks less and less like a break of structure. If we look at the 30-minute, okay, 30-minute looks like a break of structure, to be fair. 45-minute, okay, it looks like a break, but not a deep one, not a very deep break. But if you look on the 1 hour, it's not a break on the 1 hour. On the 1 hour, I do not see a break. If we look on the, I'll play it a bit more so we can see the bars. So if we look again at the 1 hour, yeah, so on the 1 hour, that's not, actually, no, on the 1 hour, it's a break. It's a break. We'll be honest, it's a break on the 1 hour, all right? But it's not a very decisive break. Let's see on a 2 hour. On a 2 hour, it's a close below, but not a decisive close. On the 3 hour, yep. Okay, but we can't really look at anything past the 2 hour here because our structure fails to exist. So I'll be honest with you. This is just me being real, me being straight. Like, if you actually thought that was a break, a close below that prior low, and as a result, you look for a retracement short, I can see why. I can see why. All right, I can see why. However, there is something worth noting whenever you have situations like that. Sometimes it's worth saying, okay, how deep did that break come across? So in this situation, we have something like this. We have a high, we have that low, we have that high, it swept that level, and then we have a break that looks a bit like this, okay? And we're looking to see, okay, cool, is this break here a decisive enough break? This bit of price action here, is this a decisive enough break? What I like to do is I like to say, okay, well, why don't I measure, okay, how deep is this line here? From the base to the peak, how deep is it? And then I like to also do this. I like to say, okay, cool. From the point where we've broken down, how deep is that measure? All right. And what I like to do is if I compare these two, I would like to see at least maybe like a 30% increase or 30% breakdown, before I consider it a good break. And here we can see that this is not a 30%. All right, the 30% drop down would look probably more like this. Okay, so if we superimpose that and then drag that down here, so that would mean to consider this as a nice, confident break, we might want to see it do something like that. Okay, hope this makes sense. So I'm going to contextualize this now and put this into play. So what we would have done there is we would have said, all right, cool. Let's take it from this low to this high. All right, and let's take another one and let's draw that. Let's just see what the 30% mark would look like. That's 50%. Let's say 30 is about there. All right, then I'll bring that down and say, all right, cool. Well, we still had a bit of room, didn't we? All right, so that means, this perhaps may not be a decisive break. Okay, but it's a tricky one. That was a tricky one. So if you did, if the market caught you out there, that's fine. Don't worry about that. Just you've lost the 1%, you go on to the next one. Now, how could we have entered that trade? Let's go on the 5-minute. Let's go on the 5 minutes. See, did we get a flip in market structure? Because I would have said what the confirmation is for that trade. So let's take a look to see what the confirmation was. So it says for any of these trades, I want to see a flip in structure on the 5-minute chart or higher before entering. So where's a 5-minute chart? This is a 5-minute chart. Do we get a flip? But the 5-minute structure looks like this. We've got low, 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 high, low, 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 high, low, low. And then we get that really aggressive move up, okay, up there. And then we get that retracement before we carry on up. So we did get a flip. We got a nice, nice flip. And that breaking structure for the flip took place right here. That took place at 62,000, about 62,360. All right. So that's where we would have been interested in that trade looking to enter. Now, there's so many ways you could have entered, and we're just going to analyze all the different personalities of traders and all the different people who would have entered the market based off of that move, and let's see how they would have done as far as the risk to reward goes, okay? So let's do that. So first, person A. Person A entered a long. Person A said, you know what? As soon as I see that break, I'm going to wait on the 5 minute. As soon as I see that break, I'm going to wait for that candle to close. As soon as that candle closes, I'm in. That's person A. Okay, and they're going to cover that low for their stop loss. Now that person at the moment would have netted. Let's see. Oh, that was a juicy trade, man. Oh my goodness. That was a juicy trade. So big congrats if you got that one. All right, so person A, based off of that trade, would have made, if they're still in that trade, and the chances are you've taken profits, X, Y, Z. But if you're still in that trade, that would have netted you at least 8x. So you put 1K in, you've just made 8K. 8K on a Monday morning. All right, is it morning? Let's take a look. No, 8K on a Sunday afternoon, but you would have cashed out. Maybe you cash out about now. Yeah, 8K within 24 hours. Not bad. That is not bad. All right. All right. So that's person A. Person A, type A. Person just wanted to get into it. They got into it, and that's it. Now, type B said, based on a 5 minute entry, well, let's look at a 10 minute entry quickly. Yeah, you could have entered this on a 10 minute, but if you were basing it off of the 5 minute entry, you'd have said, I would like to wait for a retracement. So that person waited for that retracement, and that retracement actually took place on a 5 minute around here, which meant instead of getting that 11x, in this case, waiting for the retracement on the 5 minute actually worked to your disadvantage. So you actually just made 6x. So you made 6 grand off of 1 grand. Now, if you entered on a 10 minute though, well, you didn't really get a 10 minute retracement until down here, okay? Until down here. So now we're talking. So now we've got that 11x. Yeah, nice little 11x if you enter that retracement. If you waited for that retracement, chances are, even if you did wait for that retracement, you didn't quite get it at the bottom, right? So let's do an average. Let's say you entered around there. Let's say it's 7x, okay? So, still a very good trade. Still a very good trade. Now, let's say you missed the initial entry and you said to yourself, all right, even though I've missed the initial entry, I still want to get involved, all right? And I'm not scared of entering a trade perhaps on the second expansion leg or the second cascade, so to speak. So what would that mean? That means, well, that's fine. I see the breaking structure here. Yeah, that was the break. Yeah, but I'm going to wait for that retracement. All right, cool. I missed the first retracement, so we broke again. All right, and then I'm going to wait for that second retracement, and I'm going to enter in that second retracement. If you enter there, still a very good trade. Now let's check. Are you still in discount of your range? Well, if this is our range, excuse me, I think I've just moved my alerts there. But anyway, let's just check. Are we still in a discount of our range? Well, if this is our range high to range low, yeah, we're still in discount of our range. So why not? That was a deep retracement. We're still in discount of our range. So why not? Why not? Why not? Why not? Why not? Why not? Okay, so what we're going to look at now is we're going to see if that person who waited and entered on that second expansion leg, or those group of people who entered on this second expansion leg, let's see how they did and how they would have done. So if we go down to the 5 minute now, and we say, cool, we missed that first expansion leg. Whew. That was we'll just make it yellow because I think yellow looks quite nice. Oh, not that. All right, so that was a break there. We missed the first expansion leg. That was the place to wait for. We got a second expansion leg. Then we started doing this: lower, low, lower, high, lower, low. Momentarily looks like we were breaking structure, but we didn't. Even if you entered here, your stop loss would be down here anyway, so you'd have been safe. Okay. And then we came back for another leg down, so lower, low, lower, high, lower, low. Then we actually broke structure here. All right. So that would have been a place to enter that trade, or you would have waited for that retracement and took that all the way up. Now, if you want to refine that entry, yes, you can find a demand zone in there to refine that entry. I'm pretty sure there probably is a demand zone in there. That's why price came that deep. Okay, but that's scary though, isn't it? When you see these bear bars coming down like this, it's a scary thing. But that would have been a nice trade. That would have been a very nice trade. I'm not going to spend time investigating that to see if we had a nicer entry, but let's just say, let's just say you entered that long, let's say in the middle, around there. Okay, that would have been a very nice trade. I'm pretty sure this would be at least 10x. I think this would have been at least 10x. I think if you oh my god, no, probably. Oh my gosh. Oh my, that is 35. What? 35x on that one. So if you put 1 grand, what have you just made? Come on. Yep, you've just made 35 grand off of that trade. All right, so 1 grand has just netted you 35 grand. Anyways, that's how it all works. So if you're new to this channel, if you're new to obviously seeing trading this way, and analyzing risk to reward, analyzing supply and demand, and understanding actually what goes on inside these bars, feel free to hit that follow button and stay in the loop. All right, so what's next? What's next? What's next? What's next? What am I looking out for next? Well, I've already told you what I'm looking out for next. So I popped that. I think I posted this morning. So I said, well, we've had the expansion out of that range. This is the range we're looking at. We've had high lows on the way up. But we've got some areas of interest. Area number one was actually following that cascade up, entering a nice mitigation into demand long. If we got that, great. If we didn't, that's fine. All right. But we're headed towards this green line. This is our range high, where we're looking for a short, of course. But we're aware that we've got demand zones above. Also, we've got some other areas we want to watch out for. So I'm just going to play that, see what's happened since morning. Well, we didn't retrace as deep as we wanted. We've kind of continued up. So let's take a look at where we are now. Now, the big question, the elephant in the room in my head right now is why the hell have we stopped here? Why are we getting some resistance here before we touch that green line? And there is an answer for that. And I'm going to talk to you about that in a second. But before I do that, I'm just going to discuss why we're looking at the areas we're looking at. Area number one. If we zoom out, we can see that on the daily, Bitcoin is giving us this nice little trend line over here. It's been respected. It's respected once, twice, 3 times. Are we going to get a fourth tap? Why not prepare for that? So we're waiting for that fourth tap. And it's also confluent with our range high, which is that green line. It's also confluent with our demand zone. Okay, well, that's not demand zone, daily supply zone. A bit confused by the D. Daily supply zone, all right? And as far as our market structure goes, we can see that we have something like this, okay? So if you think about it, on the daily, all of this structure here in this box is kind of just internal structure from that expansion leg down, okay? So price could well do all of this first, come back up before it looks to challenge either this high or this low, so keep that in mind. That's why this is still a key region here, when we've drawn a line there to exemplify that. All right, so that's what we've got. That's why we've justified that setup there. The next setup, it goes without saying, well, it's a range high, so we're looking for a deviation of that range high. All right, so that's what we always do, and that's what we're doing. Now, what else are we looking out for? If we drop down to the 4 hour, so we've just done our higher time frame analysis on the daily, we're dropping down now to the 4 hour. On the 4 hour, what can we see? Well, we can see that we have this expansion leg from the internal range low, creating a higher high, higher low, and we've had this higher high. So could we simply get a retracement on the 4 hour, all right, to justify a long trade up to some of these highs? Now, it could be that we sweep the range high beforehand. That's fine, all right? But it could be that on a 4 hour, we actually do get a retracement, maybe something like this before we go up, or something like this before we go up. And that's why I'm not sure you can see it, but we're looking for a trade there, but we're also looking for a trade here. Now, if you wanted to refine this a bit, if you wanted to refine this better, we've got a daily zone inside, and I think we have an overlapping 3 hour zone inside, okay? So definitely double check that to see if that is the case. So I'm looking for that retracement long. That's going to be my next play as well. All right. Now, the big question is, why are we stopping here? Why are we getting this resistance? Why do we all of a sudden have this black bar that's come up here? Well, it's actually quite obvious. The reason we have this black bar here is because of what happened over here. All right. So let's investigate that. If we drop down maybe to the 30-minute, what we're going to see here is that actually we have some sort of distribution that took place. that this took place around late September. So around late September, we had this range. All right, price was creating higher highs and higher lows, although price slowed down. But when it slowed down, it did something really interesting. Okay, so I'm going to show you what it did. So what price did is, first of all, price created a range. So if we judge that range, where should I judge it from is the question. Okay, I'm going to judge it from here actually. I'm going to say this is my range. Now, if this is my range, all right, I'm going to say, okay, cool. First of all, why don't I see where our supply and demand zones lie in that range? And what you're going to see is that you have a 1 hour zone. So if we go up to the 1 hour, then we have a nice 1 hour supply zone. You see that? Nice little 1 hour supply zone. All right, in there. And not only do we have a 1 hour supply zone, this is going to blow your mind. Are you ready? We also have that level as being our POC. Now look at that. That's the point of control. All right. According to fixed volume theory, your POC is the area where you've had the most amount of transactions, most amount of buyers and sellers, you know, in that region. So when we were in this range, this was deemed the area, which a lot of buyers and sellers actually interacted in the market. So hence, that's why we come and look at that level for potential action in the future. So look at that. Not only is it our 1 hour demand supply zone, it's also our POC. And guess what price has done? Price has done all this fluff. It's come down, it's done all this fluff, and then it's come back up. And as soon as we came back to that level, we're getting a reaction. Okay, so we'll kind of struggle to really pierce above it. Makes sense. All right, it makes sense. So that's why price is doing that. All right, so it's really important to understand what's happening as far as price action goes. All right, and not just looking at the charts thinking, oh, well, I'm not sure what's going on, but price is going up. That's exactly what's happening. All right, okay, so now what are the next steps? Well, next step, simple. I'm going to look at the range high, see what price does as we come up here. Hopefully, price gives us nice market structure. Hopefully, it does something like this. So as it comes up, it gives us a nice retracement. Then it sweeps before it breaks, then retraces, and then comes further down. This being the break, this being the entry point. Okay, that will be quite nice. Okay, so that's ideally what I'm looking out for. But I realize that may not be the case. Also, be careful. You have to be careful here. Why? Because you still got reason for price to go above. Okay, first things first, you've got this trend line. Second, you've got this daily supply zone, and you've got 12-hour supply zone above. Also, you've got the all-time high at about 74K all above. Price has not retested that price level since March. Okay, so since March 13th, price has not touched that. All right, but this is a key trend line. I'm sure every YouTube trader in the world is looking to see what happens at this trend line. All right, so definitely look out for that as well. And that's kind of it. That's what comes to mind at the moment. Um, I'm sure there are ancillary trades. I'm sure there are smaller trades, smaller time frame scalps you can enter. And if you can do that, feel free. In my opinion, I think Bitcoin is gearing up for a big move. I think what we're seeing here is the build-up of liquidity potentially for a big move. When that big move is going to happen, we're not entirely sure, but we're just going to have to wait. Why? Because Bitcoin loves to do that. You see, Bitcoin pierced up, relaxed for a bit, and then bang. It pierced up, relaxed for a bit, and then bang. Relax for a bit, and bang. Now we've just had a massive, massive relaxation period. Okay? Before we go bang. All right? So this could easily be, all right, a rally base rally. Okay? So definitely get ready. When everyone's sleeping and everyone's thinking, crypto is boring, crypto is dry, that's when Bitcoin likes to move. Look, it does it here again. Can we see that? So we have a massive range period and then bang. Massive range period, bang. Massive range period, bang. Okay? Loves to do it. Massive range period, bang. Also, we drop here, massive range period, bang. Okay, we drop here, massive range period, bang. All right, so just be aware. Make sure you're doing your TA every day, and if you do need assistance, you need one-to-one sessions. You need, chats about your trading journey, and you want to get involved with Discord, and you want to get involved with the signals. Feel free to hit me up. On the website, there's a WhatsApp function, or there are sections in the forums and the website tradejournal.co.uk where you can actually send me a message. All right. Anyways, hope you have a great rest of the week, and I will see you next time.